All right, so we're here now, guys. So sorry for that. All right, we're here now, guys. So sorry for that. So, are you ready, guys? Are you ready, guys? Because I am really ready, and I'm ready for us to do this. All right. So, yes, good morning to every one of us. Um, Regina, good morning. Sophie Abubakar, good morning. Adewale and Ohai Spencer as well, good morning. Can we just quickly do something? All right. Every one of us, please drop your location where you are watching from. Okay. Just drop your location, drop your city where you're watching from. Drop your city in the comment section where you're watching from. I want to know where you're watching from. We can just quickly do that before we quickly run into what we have for today. Okay, so drop the city where you're watching from. Drop the city where you're watching from. Drop the city where you're watching from. I want to see that. I want to see that. I want to see that. Okay, we have Lagos, we have Abuja, and we have Uyo, Akwa Ibom State. Please enable caption. I can only understand through it. Oh, Sophie Abubakar. Do I really know? I think caption can only appear after the video has been fully uploaded on YouTube. But I think now that you said it, I'll try my possible best to go back and find out how to add caption. Okay, I'll try to do that. All right, so we have Adewale from Ibadan, Shegu from Lagos. Okay, Olaoge Shegu, my guy, and Teach Me by Regina from FCT. Gideon watching from Abakaliki, and Mba Christian watching from Kaduna. And this other one says, I represent Lagos Titans. So every one of you, welcome, welcome, welcome. Before I start, I want to offer a sincere apology for last week Friday, because last week Friday we had NFP, and also we had series of radio sessions in Kaduna, because we had the Kaduna Digital Wealth Seminar. Okay, so it was quite impossible for me to take GoPro mentorship, because already by 11 a.m. I was more like on transit going to Kaduna. So it was kind of impossible for me to have a GoPro mentorship session. All right, that was actually what happened on on Friday last week, and then of course the NFP. But I'm back again this Friday, and we would be delving into something really good. Actually, it's going to be a continuation from where we stopped the previous Friday. Okay, so it's nothing really new, just a continuation of where we stopped. And then I have actually tried to put up a whole lot of materials around that. So I'll be sharing with you all of these contents every Friday. Once we are fully digested and we fully understand everything about potential trading areas, then I would now go into confirmations. So listen carefully, because I'm infusing a lot of new ideas and smart money concepts also into trading, to the retail trading plan. Okay, so just so that we could have to make better trading decisions. Okay, we could have to make better trading decisions and also have more sniper entries, be more confident as well whenever we are trading the financial market. Okay, so let me go straight over to the chart. So last week I was basically talking about how we can find the depth of retracement. Okay, if we want to know the direction of a market, okay, how do we know the depth of retracement before we are saying that, okay, look at the point where this price is going to get into? And I basically showed you how we can use the Fibonacci retracement tool to find this, okay. I basically told you how to use the Fibonacci retracement tool in order to find the depth of retracement, okay. And what I told you was very simple, right? Now take for instance here, okay, let me use this. I'm just doing a recap for now, okay. I'm just doing a recap, and after the recap we will go into business proper. So I was saying that, for instance, price is going up and then it comes back below before it goes up. Okay. Now the question is, how do we find that this is the point where price will reject to before having to pull to the upside? And then I told you that the only and easiest way we can use is the Fibonacci retracement tool. If you can remember, I said that simply pick your Fibonacci retracement tool, put it at the first point where the market took off, and ensure that it is run to the top before the reversal. All right, so place it to that top. So basically you're taking from point A here to point B, okay. So I was saying that basically you're taking prices from point A here to point B here, okay. Beautiful. So you have your Fibonacci retracement tool from point A to point B, and then of course the depth of retracement, most times when you find this retracement come into the 61.8 level or the 50% level, but the more discounted price, or the more premium price is when I mean discounted, that is the best price to buy. And when I say premium, I mean the best price to sell. All right. In future time, I am hoping to organize a full mastery course on these terminologies and also how to trade them. All right. I'm coming up with something really big for you guys, something really big. All right. I'm going to be teaching you all the SMC concepts and all the SMC ways of trading that I have actually been learning for weeks now. Okay, I'm actually going to be not doing a video, okay, or most likely I might do a full course on it, and it will be given to you for free, okay, but only to our faithful and dedicated clients. So we said that the depth of retracement most times comes into the 61.8 level. For me, I like my safety to be around 61.8 to 79, okay, from 61.8 to 79. Now it will be left for me to now know within this zone where that reversal begins to occur. That's where confirmation comes. So some other day I'm going to be teaching you what confirmations. So you can see that for me to know that this is a point where I will be expecting the market to come into and then begins to pull up, I would need the Fibonacci retracement tool. Okay. The same applies for when we have a bearish retracement or a bearish movement, where you see prices will drop, right, and then retrace back up before it begins to go to the down direction. The question again is, how would I know that this point here is the best price to want to buy? It's still very simple. After prices makes this first swing from point A to point B, all right. I hope I'm not talking to myself. Can I pay for a copy of that your forex notes? This guy, you're not serious. All right. So let's continue, guys. So when price moves from, let's say, this point A, okay, from point A to point B, and then it begins to retrace, okay, How we would most likely know the depth of retracement, where it will end before it begins to fall, is simply take your Fibonacci retracement tool. Retracement, not extension. We have Fibonacci retracement, we have expansion, we have extension, right? We're basically talking about the retracement. The retracement tells you the depth of retracement, and retracement is equal to entry. Extension is equal to take profit. Okay, I'll take that again. It might not make sense to you now, don't worry, but it's going to make sense. Anytime we use the Fibonacci retracement, we want to know the depth of retracement. Remember, retracement. Who can tell me the meaning of retracement? If you know that, type that for me in the comment section. What's the meaning of retracement? Retracement. Okay, retracement. Retracement. So in Forex, what does retracement mean? I need somebody to quickly remind me in the comment section. I need somebody to quickly remind me in the comment section. I need someone to quickly remind me. I want to explain a very big concept, okay? I want to explain a very, very big concept. So I need you to remind me what retracement is. It means reversal. No, Isaac Buba, retracement is not reversal. Ohio Spencer said correction move. Okay, I think you were trying to say corrective move. I think yes, corrective move, yes, but not reversal. Pull back. Gordon Nick said pull back. Amazing. Nathan said reversal. Victoria said reversal. No, retracement is not reversal. Okay, it means a little pullback before trend continuation of the amazing Ubong Akpambang. So sorry, I'm not able to pronounce your name very well. He has already explained it. So listen, guys, there is a difference between retracement and, okay, there's a very big difference between retracement and reversal. I'm coming. There's a very big difference between retracement and reversal. And you as a Forex trader, you should be able to understand the difference between these two, retracement and reversal. All right. Retracement is when the market is observing a little pullback so that it can continue in the prevailing trend. Reversal is a complete change of direction or a change of market structure or a change of market dynamics. Okay, so a market was forming lower highs and lower lows, lower highs and lower lows, but all of a sudden begins to form higher highs and higher lows. That is what we call reversal. Okay, reversal can be likened to failure swing points, failure swing zones, where higher highs and higher lows are broken. The laws of higher highs and higher lows become broken, and then we begin to see lower highs and lower lows, or the laws of lower highs and lower lows are broken, and we begin to see what we begin to see higher highs and higher lows. This is what I mean. Sorry, remember this is a GoPro mentorship class. So even if I have something planned out that I want to teach you, if I notice that you don't understand a concept you're supposed to understand, what I would be doing is to at least touch it if it is not going to take so much of our time. But I will still try to maintain our 1 hour so that it's going to be value packed. Okay. So guys, let me just quickly show you with a good example. Let me just quickly show you with a good example. Sorry, let me use gold. Beautiful. Now watch gold, guys. Everyone, watch this gold chart that I'm giving to you now. Watch this gold chart, and I'm going to be drawing. The lines on this gold chart. So price moved from this level to this level, then to this level, and again to this level, then to this, again to this, then to this, and again to this level, and again to this level. Okay, okay, so let me make this a bit thicker so that we can see it. Now watch this, guys. If you watch this gold chart on daily time frame, what you would notice is that price is respecting a particular pattern. True or false? True or false? Price is respecting a particular pattern. And what is that pattern that price is respecting? Price is respecting lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Let me put it so you can see it. Okay, so this is going to be high. Okay, this is high. This is, those of you that are already past this level, please don't be offended. Let's just carry everybody along. Okay, when we carry everybody along, that's the essence, so that everybody can win together. Everybody can win together. This is lower highs. This is lower highs. Okay, this is lower lows. Okay, and then consistently we began to see lower highs, lower highs, lower highs. Can you see that? Apparently, as we are having lower highs, we are also having lower lows, lower lows. Can you see that? Can you see that? It's making sense, right? If it's making sense, let me know in the comment section so that I know I'm not speaking to myself. If it's making sense, just type sense for me in the comment section. Now, this is a structure on its own, okay? This is a market structure on its own. This is, in fact, this is one of the very basic and elementary market structures that you will be knowing, okay? One of the very basic and elementary market structures that you'll be knowing. By the way, I did not finish what I plan to show you on market structure, okay? But I felt this is more important. That is why I decided to take out time to show you potential trading areas, okay? So now watch this. This began to form lower highs, lower lows, lower highs, lower lows, lower highs and lower lows, and lower high again. Now, it was supposed to form another lower low, right? It was supposed to form another lower low, but what happened? It began to form equal low here. Can you see this now? Price began to form equal low, and from that equal low, it formed a high this time around. Can you see this high? It formed a high, but not a lower high. This is not a lower high. This became a higher high. Can you see that now? This became a higher high. So this is to tell you that there is a reversal point around that area. Now let me show you the difference between retracement and reversal. Follow me, guys. I want to show you the difference between retracement and what? Reversal. So this is the structure of the market, lower highs and lower lows. So we all know and agree that price is going down, is it not? Yes. Now, if price is going down, let me use another terminology. The path of least resistance is where? Down. That is a path where market does not struggle to go. It's down. But if you notice carefully, anytime market wants to go up, it is struggling. Can you see the small candles? Sometimes it will even consolidate. And then small candles. Are you seeing? But when it wants to go down, it goes down very easily. But when it wants to go up, it struggles, it consolidates, and with small candles. It simply means going up is a problem for it. Anytime it wants to go down, it goes down very easily. That simply means that the path of least resistance is to the downside. It simply means that this is typically what? A bearish structure, a bearish movement. Do you understand? It's typically what? A bearish structure or a bearish what? Movement. So this, now that we've known that the original direction of the market is down, anytime prices move to the upside, this is what we call what? Retracement. Okay? This is what we call retracement. So this is retracement. This is retracement. Okay? This is retracement. And as well, again, we can consider this to be a retracement until it is no longer. So this is from this point here to this point here is a retracement. From this point here to this point here is a retracement. So what is retracement? Retracement is a pullback from the market, before prices continues to go in the original direction. That is retracement, not reversal. Okay? Retracement, not what? Reversal. Reversal is a corrective move. Remember, there are buyers and sellers in the market. So when the sellers are dominant in the market, when the sellers are in control of the market, the buyers will want to at least push prices up a bit. They want to show themselves because they are also part of the market. But the sellers are more powerful, so they will continue to push prices below. Does it make sense? Does it make sense? This is corrective move. Okay, now let me show you reversal. So this is retracement, but let me show you reversal. So reversal happens when the structure begins to change. That was what I was explaining to you people in the first class. When the structure begins to change. So we were supposed to have a lower low, but we had an equal low, and then again we now add what? Higher high. This higher high now symbolizes that what? Price is about to do something funny. Okay, let me hand it there. Price is about to do something funny. Do you see that now? So once you see that the last lower high has been invalidated, this is the last lower highs. Okay, we had this level as the last lower high. Price tapped here, came down, tapped here again. So we consider this as equal what? Low. But once that particular level here has been invalidated, it has been invalidated. Watch this. Price tap, and then closed above this high. Once it closed above that high, Yoruba people will say, Otilo, market is gone. Okay? 90% of the times when we see price movement close and create something different from what we know, if it is a higher high, let it continue to be higher highs. If it is a lower low, let it continue to be lower low, lower high. But once price breaks this structure, it simply means that price is planning to reverse. So what happened? Price then came here, created what? A higher high now. Can you see this now? A higher low. This is higher low. Okay? So it began to form what? Higher high, higher low, another higher high. We already know that this is gone. Okay? We already know that this price is what? This price is gone. Does this make sense? Does this make sense? So this particular area here, the whole of this area here we're looking at is what we can consider this whole area here. Okay? This is what we can consider to be what? A failure swing zone. That is a reversal zone. Okay? So this is reversal. This whole movement, this particular movement here, from lower low to higher high, this is a reversal. From lower low to higher high is a reversal. But so long as price continues to, okay, let me clean this, sorry. All right. So long as price continues to create this pattern, lower highs, lower lows, or higher highs, higher lows, then we're still very safe. Now, I was making a recap about the Fibonacci retracement tool, right? And I told you that if price begins to want to go down, how do you know? How would you know? How would you know? Like, what F13 do you have to say that this is the zone? It is this particular price area I'm expecting price to come before selling off. That is where the retracement tool, Fibonacci retracement. Now, retracement, remember we've defined retracement now. We said retracement is a little move, a little pullback in the opposite direction of the prevailing trend just before the market will continue to move in the direction of that prevailing trend. Now, how were we supposed to know that this is the price where price will most likely come to before it sell off? So we will pick our Fibonacci retracement tool, we will take it to point A, we will drag it till this point here. This is the last point, right? We'll drag it to that last point there. And of course, this is where the retracement began. Can you see that this movement moved slightly into 50 and 61.8 level? In fact, if you zoom in carefully, you will notice that it almost tapped 61.8. Can you see that? It almost tapped 61.8. Let me still zoom in so you see. Can you see this now? It almost tapped into what? 61.8 level. I think I do not adjust it well. Good. Can you see that it tapped just 61.8 level, tapped, and then began to fall all the way to the downside? So the Fibonacci retracement tool is one powerful tool that you would use. It doesn't work 100% of the time that, okay, price must tap 61.8. No, but at least if it retraces into 50% or 61.8% to 79%, in fact, between 50% to 61.8% retracement, it is very good to mark that zone as an area where we are going to see price will pause and begin to move in the opposite direction. Let's try it for some other ones that we have here. So I move and I have it here. So this only retraced into the 38.2 level, okay, which is also a good zone, but not so good, okay. So in this case, if you're looking for 61.8, you would have missed that trade. Let's look at this retracement again. Let's look at this retracement again. Let's look at this one. Can you see this one now became very perfect? That's from this point to this point, the retracement came into where? 61.8. So at this 61.8, if I am the one that is trading, I would simply put my risk to reward stuff here like this. This is how sometimes we get sniper entries. And my stop loss is going to be very tight, and my take profit is going to be at least this high here, okay, at least this low here. I know it's going to break it, but to be safe, I'll just close out my trade around that zone. Can you see that now? Can you see that now? This is how we get sniper entries into the market. This is one of the ways, not actually the main way. This is one of the ways we get sniper entries into the market. And then again, you see, and then again, what happened? So this was achieved 1:6. It simply means that if your stop loss is calculated based on $20, if you had wait patiently for this trade, you close out on $120. That is times 6. If your stop loss is calculated, if you have maybe big capital, your stop loss is calculated based on $50. This is $300 for you, okay? So you can use this method often. You can use this method very often. So I'm still making sense, yeah? So that is one of the things that we looked at. I hope to share more light on it in the future. But for today, I want to, for today and the coming Fridays, okay? For today and the coming Fridays, I sincerely want to show us how to find potential trading areas and trade it. So what I just did now is one of the ways to find potential trading areas, okay? So guys, we're starting fully, even if we have about limited 30 minutes of time, but we're starting fully, and I've taken one thing out of the things that I just want to show you. So if you are still here with me, I need everybody to type in that comment section, potential trading areas, okay? Type in that comment section, potential trading areas, potential trading areas. Potential trading areas. Type that for me in the comment section, potential trading areas, potential trading areas. How can we know potential trading areas? How can we spot potential trading areas? how exactly can we do all of this is what we want to learn today. So type that for me in the comment section, potential trading areas, and then I'm going to fully start. Hopefully, how many more weeks do we even have in August? How many more Fridays do we have in August? Aside this Friday, we're going to be having 2 more Fridays. So what I would basically do is I'll try my best. I'll try my best I will try my best to ensure that we will finish everything about potential trading areas in the next 2 Fridays. Okay, I'll just lay the foundation here today, and then we're going to finish up anything about potential trading areas in the next 2 Fridays. Then what will happen is we'll still have deeper understanding of market structure, because potential trading areas as well will help us with market structure, and then we'll go into confirmation. It's holistic. And don't forget, don't think that I did not remember that the link was supposed to be sent to only people who have funded accounts. I remember vividly, but I decided to still make it free and open. But I will make it free and open for you guys again for this August. So if you know that you're benefiting and you are enjoying all of this class, getting all of the knowledge and value, but yet you are yet to fund your trading account, please, it's an act of criminality to be benefiting where you don't sow, to be reaping where you don't sow. Even if you check the Nigerian Constitution, Section 194, I don't know the section, but just know that it is there in the Nigerian Constitution. It is actually a criminal offense to be benefiting where you are not sowing. So guys, the only thing that I am requesting that you do, okay, for all of this value and for all of this knowledge, is do business with EQ Markets Global, okay, and do business with our global affiliation Equity. Okay, so if you are yet to sign up an account, you don't have an account, you can simply create an account by going to www.eqmarketsglobal.com. Okay, www.eqmarketsglobal.com. Go there, create an account, and then sign up. Okay, and then sign up. So that is what you should be doing, okay? So that I will be happy to dish out more content. I have too many things to dish out to you guys, but I'm limited because most of you have not done business, and I can't be sharing what I have to only one person. It's a bomb. It's a bomb, guys. What I have, it's a bomb. Okay, it's a bomb. So let's do business, and then we will be sharing so much value together. All right, so talking about potential trading areas, what exactly are potential trading areas? What exactly are potential trading areas? If you're writing now, you can write, okay? If you have a pen and jotter with you, you can write. Potential trading areas are market areas or market zones where we have, I'll take that again. Potential trading areas are market areas or zones where it is best to find entry for a buy or a sell trade setup. Potential trading areas are market areas or zones where we have potential trading areas are market areas or zones where we have what did I say the first time? Where we have the best entry for a buy or a sell trade setup. So like I said, it is not everywhere. Some of you are used to entering the market anytime you open your chart. Every single time you open your chart, you want to enter a trade. Some of you trade candlesticks. What I mean candlesticks, you see this candle alone. Today candle will be bullish. Today candle will be bearish. You don't trade forex like that. So you trade only this candle. You open here, you close here, and you go. You're not trading forex. You're gambling. I'm sorry to say, but that's what you're doing. You're not trading forex. You are simply what? Gambling. So forex traders are people who have systems that work. people who follow their systems. That is why they say, what is your strategy? What is your concept? Understand the concept, understand the strategy in the concept. That forms your trading plan. Then that forms your trading plan. Then you trade the plan. You plan your trades and you trade the plan. Okay, so potential trading areas are those zones where we can find the best time or the best price level for us to buy or for us to do what? Sell. Now, for SMC traders, they'll most likely call those zones premium price, or they will call it premium price, or they will call it discounted price. So let me just quickly explain, then I'll come back to retail trading method and strategy. Okay, so still follow me. So they all mean the same thing. Okay, they all mean the same thing. Now watch this now. Okay, now I have two colors here. Below here I have, let me make this the blue. Yeah, below here I have the blue light color, and above here I have the red light color. Okay, so let us say that this is premium. Let us say that this is premium price. I'm trying to explain to you basic concepts. And of course, let us also say that this is discounted. Okay, this is discount. Beautiful. Now, please follow me, because what I'm explaining is important. By the time I told you that I will take you on full SMC concepts and even many more concepts, this is going to make more sense. So as a trader, you are supposed to buy at discounted prices, then sell at premium prices. Now, in the world of retail trading, it is called overbought zone. Okay, selling at overbought zone and then buying at oversold zone. I'm coming. Okay, please follow me still. So if this zone here is an overbought, okay, if this zone here is an overbought zone, overbought simply means that the market has been buying and buying and buying and buying and buying and buying. Okay, so I'm saying overbought, OB, please. SMC traders, this is not order block. This is overbought. Biko. So if this is an overbought zone, overbought simply means that this market has been buying and buying and buying and buying and buying and buying. So where currently the market is, it is overbought. It simply means that the buyers are tired of buying. Sellers will enter the market and begin to price this to the downside. Does this make sense? And of course, if we have, on the other hand, an oversold, okay, if we have an oversold zone, okay, so oversold, let me use OS, okay, oversold. So if we have an oversold zone, it simply means that sellers have been selling and selling and selling and selling and selling and selling. So the sellers are tired of selling. They want to do what? They want to buy. It simply means that if we can find those overbought zone and oversold zones, then we can find a way to sell at overbought zone, buy at oversold zone. Does it make sense? Overbought simply means market has been selling and selling and selling. The buyers are now tired of buying. So it simply means sellers will enter the market at that time and begin to push prices below. So at overbought zone, we will look for opportunity for when we could enter the market for sell. And in oversold zone, because sellers have been selling and selling and selling and selling, okay, they are tired of selling, so buyers will enter the market and begin to push prices to the upside. So what would we do at oversold zone? We are going to look for opportunity to do what? To buy. Does this make sense? So invariably, this is the same concept that we have called premium and what? Discount. Okay, this is the same concept that we have as what? Premium or what? Discount. Now listen carefully. As a trader, you need to find those premium zones, that is sold over bought zones. Price is too high, it will definitely crash. It's for you. It is very, very important that if you will be successful and make consistent profit, you need to find these zones, that particular premium zone. So it is at that premium zone you do what? You sell. Okay, at that premium zone you sell. Okay, come in. At premium zone, you look for opportunity to do what? To sell. But at discounted zone, you look for opportunity to do what? To buy. Okay? Premium zone, you look for opportunity to sell. Discounted zone, that is price at falling and falling and falling, it is now discounted. Discounted means they have removed money. Okay? So you look for opportunity to do what? To buy. Let me also use another way to explain this to us. If, for instance, in Nigeria, we're buying PMS, that is petrol motor spirits, that is fuel. Okay, we're buying fuel at a premium price currently. Do we all agree? Because this is not how we used to buy fuel before now. So before now, the price was what? Discounted. Is it not? The price was what? Discounted. So at that price, if we buy, then price goes up, we will make profit. But at premium price, we will pay more. We will pay more. I don't know if you understand. At premium price, we are paying more. So we are paying premium for petrol motor spirits than we were paying before when it was discounted. So whenever price is low, buy. Let's come back now. Let's come back now. So when we basically talk about potential trading areas, we're talking about looking for the premium prices so we can sell, and we're also looking for what? The discounted prices so that we can do what? We can buy. I think I've been able to connect everything now. I've been able to connect everything, right? So when we talk about what? Potential trading areas, we're looking for what? Premium prices so we can sell, and we're looking for discounted prices so we can buy. I have to repeat it again so that you can understand it. So one of the ways for us to find those premium prices or discounted prices, one of them is what I showed you in the last Friday where we had class, and then the recap I did this morning. So this market is now going all the way down. Okay, this market is now going all the way down. Let me show you now. First, we talked about market structure, and I told you how to identify failure swing zones. Okay, I told you that when market is going higher highs and higher lows, higher highs and higher lows. Okay, I'm coming. Watch this now. This market is creating consistent higher highs, higher lows, higher highs, higher lows, higher highs. But now it failed to continue to create higher low and begins to create what? A low that is lower than this previous one. So this is what we call what? break of structure or change of character. Okay, so at this particular zone here where price now fails to create a higher high, we already know that market is about to reverse. So please, this is very important. I have done this before in the last GoPro session. So if you want to watch that video, please go back to the YouTube channel and watch that video. Okay, it is there already on our YouTube page. So I already showed you how you can identify, one of the ways you can identify what a break of structure. Okay, I already talked to you about structure. I taught you one of the ways you can identify a break of structure, and also trend lines and many more things. Okay, now let us continue, because I will be showing you one of them again today, because I've shown you one now, Fibonacci, how to find premium price and discounted price. I'll show you one again today. The other rest ones that I have, I will give it to you. You can read up about it, so that in our next classes that we'll be learning, all of you will be flowing with me. Okay, so let's go ahead. So if you watch closely here, price was forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then again it created higher high. This is higher low, another higher high, higher low. Can you see this now? Or let me draw it out for you, because I know some of you might not even basically see it. So let's take this one. Higher low, higher high, higher low, lower high. Okay, so we begin to suspect, but it created higher low. So because it created higher low, we are still in play of this market. Okay, price moved up, created another higher high. Can you see that? Went all the way up, now created an equal high, equal low. Then it created what again here? A lower high. After the lower high, what happened? It cleared out this zone here. So watch this now. Even watch this, please. Watch this closely. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Can you see that? Higher low, higher high, equal low. We mark out this zone. Mark out this zone. Okay? Why would it create a equal low? So after creating equal low and it begins to bounce off, we are seeing that, okay, for this market to continue to go up, what it should do is that what? It should create a higher high. But it failed to create a higher high. Instead, what happened? Price begins to fall down. And this particular low here was cleared out. Can you see this now? So this is what we call what? A break of structure. A break of structure, because it has invalidated what? These higher highs and higher lows that we were having. Okay, so this is what we call a break of what? A break of structure. Now, if we want to trade it, the discounted price is going to be 1. Okay, number 1, using our Fibonacci retracement tool to find the retracement to the premium price, so we can take a sell. I have already shown you that one. The one I want to show you now in the next 4-5 minutes before we go is the break and retest. Okay, and for you to understand break and retest, you need to understand support and resistance. For you to understand break and retest, you need to understand what? Support and resistance. So let me quickly talk about support and resistance. I know we all know it, but let me quickly talk about it for benefit of those who do not know it before we go ahead and talk about the break and retest. Because the break and retest applies both in trend line and both support and resistance. So I'm going to basically talk a few things about support and resistance. Then I'll talk about the break and retest. But next week, specifically, we will learn about support and resistance, then the trend line technology. Okay, trend line technology, support and resistance. So we all know that a support is a market area We all know that what? A support is a market area where prices comes, pauses, and begins to go back all the way up. So this is a support area. Okay, this is a support area. Why? Because when prices came into this area, it aided the bullish movement. On the other hand, we have the resistance areas. Okay, we have resistance areas as particularly those areas where an upward movement is retarded and price will begin to go down. So this is resistance area. This is what? Support areas. Okay. Now, whenever these areas, price comes into this area, they come into one of the ways that we can find potential trading area, because that area can be discounted or it can be what? Premium. Okay, that area can be discounted or it can be what? Premium. Let me show you. Let me quickly show you. So watch this zone here. We said this is a support area, right? Why is it a support area? Price moved quickly to the upside and then dropped back. But at first, let us also extend this into the future. So watch this zone here. This zone was a resistance here because price came into this zone and dropped. Okay. Okay. So this particular area here is what? A resistance area. True? Resistance area. So whenever price comes into this resistance area, we would be looking for opportunity to see if it is a discounted price. Sorry, if it is a premium price, because now it is a resistance. Okay, so what happens again when price drove into this zone? We were looking at it to find if this is going to be a resistance area, but it was invalidated. Once price is invalidated, please don't argue with the market. Take your loss and go home. Okay, take your loss and go home. That is why finding these zones, one of the things that finding these potential trading areas will do for you is that it will reduce your risk and increase your reward. So even if you chop loss, let me use our slang, even if you chop loss, okay, your profit that you would make in subsequent trades will cover up for all the losses and even many more profits. So when price comes into this particular area, like I would always say, okay, whenever price comes into a potential trading area, I don't jump and enter the market for a sell. I don't get too excited. All right. So when prices comes into a potential trading area, just like the support or the resistance, two things are most likely to happen. Is either that support will hold or it will break. Is either that resistance will hold or it will break. So how would you know if it is going to hold or if it is going to break? That I have taught several times using the commodity channel index. So if you're still new to the commodity channel index, because it's one of the easiest ways we can use to know, one of the very easiest ways we can use to know. Okay, if you're still very new to that, then you need to identify, because we need to know. So what happened when price came into this zone? We were expecting that, okay, this is going to act as a premium price again, and then price will fall. But what happened? It broke above this zone. Once it broke above this zone, we now saw price begin to retest that same zone. Okay, we saw price begin to what? Retest that same zone. So retesting that same zone simply means that this zone is now acting as a discounted price now for a bullish movement. This forms the concept of what? Break and retest. This forms the concept of what? Break and what? Retest. So when I mean break and retest, I mean either a okay. When I mean the concept of break and retest, I mean a situation where price is resistance, but then it breaks above that resistance, comes back to retest it, and then begins to go back up. So this is what we call what? Break and retest. So this is the break. There will be resistance, maybe multiple testing, sometimes 2, sometimes 3 times. It tests 3 times. Like if we look at this now, we will definitely see that this particular zone here has been quite tested before, tested again, and then break above. You can see that. So the concept of break and retest is that a support area or a resistance area is tested, and then it is broken and then retested again. So resistance, break, turn support, price to move. So this former price that was premium becomes what? Discounted here. And then we can find that zone as what? A potential trading area. Okay? It happens in all cases. Don't worry, it happens in all cases. Let me also cite this scenario for you now. Okay, you can see this one now. A price that was coming all the way from the top, right? It comes to this support area. It acted as a support and then break that support and then retested. So this concept of break and retest, it happens regularly in the market as well. So you need to have all of this in your fingertips so that anything the market is doing, you will quickly recognize it. Because recognizing market changes in different ways and different formats and different patterns will give you that unfair advantage. Okay, it will give you that unfair advantage in the market. So let's quickly go over to the charts now. Let's see if this has been happening. Okay, let's go back. So like I said, this is support area, break, and what? Retest. And after that retest, what happened? Price really bounced off. So even if we're to trade this, okay, even if we're to trade this, we will put our stop loss just slightly below this level, and then of course we would have been targeting this high here. Okay, we would have been targeting this high level here. What happened? This is about 1:5, but this did over 1:3. Okay, this did over 1:3. We would have entered the market somewhere around this candle here. Okay, somewhere around this level here. That would have been a sniper entry, and then of course we would have had the market go all the way to this top here, all the way to this top. So we're targeting this level, but at least it did 1:3. Now I'm going to show you more examples. Okay, now watch this particular area here. I'm coming. Watch this particular area here. Can you find the support there? Can you find the support here? This is a support. This is as well a support. And what happened? Let's stretch it out. What happened? This was a support. This was a support. And then, did we see the break? Did you see the break? Okay. Somebody is asking. Okay, let me see all the stuff. Some of us jump in and out like monkeys. Yeah, I see a lot of traders do that. Even myself, I'm guilty sometimes. Don't mind me. It's not like I don't know what is right to do, but I'm guilty sometimes. And many of us, we will find 99% of traders who knows this, but they are still guilty of it. Buy at discount zone and sell at premium zone. Yes, Victoria. Camera is not clear. Please unmute. All right. See your high space. An old man in this industry, in this business, is still new. Let us click on this. So can you see this particular zone here? It was a support. Now remember that we've broken structure here. So it simply means that since we've broken structure here, we will be looking at prices going to the downside. Can you see this now? This was the last high before they push up a high high. But price have broken the higher high and formed what? A lower high and also a lower low. So it simply means we will not be looking for buy opportunities again. We'll be looking for sell opportunities. So every knowledge you have to begin to look at opportunities is what you'll be looking for. Okay, so let's quickly go over now. So here was a support, and again a support. Then we had a break. This is a retest. Can you see the retest? It is this zone here that we will be looking for opportunity to sell, because this is going to give us that that particular risk to reward that we're looking for. So basically targeting, we will basically be targeting this low here, this particular low here, and then of course our stop loss is going to be very small. If you watch this is almost 1:8. We're risking 1 to get what? 8. We're risking 1 to get what? 8. And this target was achieved. Can you see this now? I'm going to show you more. But I'll show you confirmations, because I told you as well that when prices comes to my potential trading area, I find confirmation. Okay, so I'll be showing you how to get confirmation in subsequent classes. Okay, subsequent classes. Let's start it here. This is support, this is the support, and then we had break. Okay, what is this? We had support here, we had a break. Now, without confirmation, we would enter this trade. But with confirmation, I know we will be safe. Because without confirmation, we would have just said, okay, you know what? This price coming to this zone, so I will be having my stop loss, tight stop loss, and then take profit to the downside. What happened? Your stop loss was cleared out before price begins to move in that direction. So that's why confirmation is very important. Again, let us see this one here. Let us see this one here. Can you see this now? This was a resistance. Beautiful. Can you see this now? This is resistance, break, retest. Guys, can you see this now? Resistance. This is break, retest. So at that retest, we will look for opportunity to do what? To buy. Our stop loss is going to be very tight. Okay, we'll try as much as we can have our stop loss to be very tight. Where should we be targeting? We will be targeting the previous swing highs. So if we're talking about this previous swing highs, we have one of them here. We have another swing high here. So these two zones are areas that we should be targeting. So we can have a reward system drawn up to level here. Okay, so this is about 1:6.5, and you can see how that target was easily achieved. Okay, that target was easily achieved. So the concept of break and retest is something that happens literally it happens everywhere. Literally, it happens everywhere and every single time. Okay, it happens everywhere and every single time. And this is one of the concepts that you can use to find your potential trading area. Okay, one of the concepts that you can use to find your potential trading areas. Okay, let me see if I can use some other pairs too. Let me see if I can use some other pairs. Where is Euro USD? Where is Euro USD or GBP USD? Okay, let's use GBP JPY. Let's see. All right, beautiful. Let's see one now. This is on the black time frame, but still no problem. Okay, let's still see what this market did here. Already I can find two support zones here. Support, break, retest. Can you see that, guys? This is support, support. I mean to say resistance, resistance, resistance. This is a break. Prices drove back into this zone. So this is a retest. So what are we supposed to do? We're supposed to have our long position here. Our stop loss is below the lowest there, and then of course the is this point we are getting. Can you see this now? We're getting this point, this high, and this is 1:8. Nicely achieved. 1:8, perfectly achieved. So we exit the market. Now again, price has come into. Remember what I was saying about. So if you watch carefully, this particular area here was a resistance. Okay, this particular area here was a resistance, right? Now all right, so sorry that for a few minutes. So sorry, we lost connection for a few minutes. Okay. So sorry, we lost connection for a few minutes, but we're back now. So when prices again gets to this support area, remember this is a potential trading area. But should we rush into trading the market because it came into a potential trading area? No. This is where we are going to look for what? We're going to look for confirmation on that zone. Okay, because this zone again can be what? Broken. Okay, this zone again can be broken and then come back to retest and continue to go back up. Can you see this? So this is the more reason why you need to look out for this zone. You need to look this zone carefully, all right, before you are taking on a sell trade, all right. But by the way, this is a potential trading area, and I believe that most likely we would most likely see price begin to drop from that zone. Let me see something. So this is a retracement into the 61, above the 61.8 level though, but not exceeding 79. So it's still fair enough to think that price will drop from this zone. Still fair enough to think so. All right. So I think I've bring our class to an end. The concept of break and retest is one concept that you need to master, all right, in order to find potential trading areas. Already we know support and resistance, all right? Concept of break and retest on support and resistance is one amazing concept. So in our next class, what we will look at in order to find, so we've basically touched two things, okay? We've basically touched two things. Number one, okay, how to identify psychological levels. I think, let me type that for you in the comment section. Let me type all that for you in the comment section, okay? How to identify psychological levels. Number one is um number one is the use of Fibonacci. The use of Fibonacci levels. Number two is the use of support. The use of support and resistance. Number three is the use of trend lines. Now, not just trend lines and trend line channel. Okay, trend line and trend line channel. The use of trend line and trend line channel. Okay, number three. That's number three. Number four. Break and retest. Break and retest. Now, this break and retest can happen on both support and resistance and as well on trend lines. We'll get to talk about that. Number five is the use of order block, and fair value gap. Okay, now these are amazing. So these are some of the ways that we can use to find the potential trading areas. We've basically talked about the support and resistance. We've basically talked about Fibonacci retracement tool, which is the Fibonacci retracement, used to determine Fibonacci level. Next week, we are going to simply talk about the use of trend lines and how to draw trend line channel in order to find potential trading areas. Okay, how to draw trend line channels in order to find potential trading potential trading areas. Okay, then once we are able to do that, they and also master it, the following week, which will be ending the month, we can simply talk about a brief about order block and fair value gap, a very brief about order block and fair value gap, just before we will continue. All right, so thank you so much for your time. If you've got any question, at all, please leave the question in the video on this YouTube, this particular video. Leave the question under the video. Okay, I would go through it in the next couple of hours and I will be answering your questions that you have dropped. All right, so thank you so much for joining once more. I hope to see you in another GoPro mentorship. But can I get a word from anybody? Anybody, any thoughts? I could take one or two questions just before we go. One or two questions, anybody, just before we go. All right. Are you serious? Mr. Anthony, please check your mic. I guess this is not coming from here. All right, so thank you so much, guys. Thank you so much. And somebody's asking, can we try all of this on a 1 hour time frame? Of course, yes. Of course, yes. Most times I make my analysis using 2 time frames. Okay, I use maybe the 4-hourly or the daily time frame as my main chart. Then I go down to 15 minutes time frame as my filter chart to find the best opportunity there. So yes, you can use it on 1 hour. All right, guys, thank you so much for today's class, and thank you for turning out. I hope to see you guys next week Friday. Don't miss out for next week Friday. Bye for now.